Welcome to Seniors Money, where we empower seniors with the financial knowledge they need to thrive in their golden years. I'm Michael, your trusted guide through the often confusing world of retirement finances. Today, we're diving into a topic that's making waves across Canada. A staggering increase in CPP benefits that could put an extra $1,300 per month in your pocket. Yes, you heard that right. $1,300 more every month for Canadian seniors. This isn't just another minor adjustment. It's a game changer that could redefine your retirement lifestyle. Before we delve into the details of this substantial CPP increase, let's take a moment to reflect on what this could mean for you. Imagine waking up each morning, knowing that an additional $1,300 is deposited into your account. No strings attached. That's not just extra cash, it's a ticket to greater financial freedom. It's the peace of mind that comes from knowing you can afford better healthcare, indulge in hobbies you've always wanted to pursue, or perhaps even take that dream vacation you've been postponing. This boost in CPP benefits isn't just about numbers on a page. It's about enhancing the quality of your life during a time when you should be enjoying the fruits of your lifelong labor. Now, you might be skeptical. In today's world of clickbait headlines and exaggerated claims, it's natural to question whether this CPP increase is too good to be true. I understand that skepticism. I've been in your shoes, scrutinizing every financial news story, wondering if it's just another false promise. But here at Seniors Money, we don't deal in hype or misleading information. Our mission is to provide you with accurate, verifiable facts that can genuinely improve your financial situation. That's why I've spent weeks researching this CPP increase, consulting with financial experts, and analyzing government reports to bring you the unvarnished truth. But even if you don't qualify for the maximum increase, don't tune out just yet. The changes to the CPP are extensive and multifaceted, designed to provide better financial support to seniors across various circumstances. Even if your increase is $500 or $800 per month instead of $1,300, that's still a significant enhancement to your retirement income. In today's economy, where the cost of living seems to be in a perpetual upward spiral, every extra dollar counts. So whether you're looking at an extra $1,300 or a more modest increase, the information in this video is critical for understanding and maximizing your CPP benefits. Let's talk about why this CPP increase is happening now. It's not random or a sudden act of government generosity. Instead, it's a response to a growing crisis that many of you have been feeling acutely: the erosion of retirement savings due to inflation. Over the past few years, we've seen inflation rates that many of us haven't witnessed since the 1980s. The cost of groceries, utilities, and healthcare has surged, while the purchasing power of your fixed income has dwindled. Many seniors have found themselves dipping into savings meant to last a lifetime, creating a sense of financial insecurity that no retiree should have to face. The Canadian government has recognized this issue, understanding that the traditional CPP structure wasn't keeping pace with the economic realities of the 21st century. The program was designed in an era when life expectancies were shorter, healthcare costs were lower, and the concept of a 30-year retirement was almost unheard of. Today, many Canadians are living well into their 80s and 90s, a testament to medical advancements but also a challenge to retirement funds that weren't built to stretch that far. By increasing CPP benefits by up to $1,300 per month, the government is attempting to bridge this gap, providing seniors with a more robust financial foundation that better reflects the current economic landscape. But there's another equally important factor driving this change: the shifting dynamics of retirement itself. Gone are the days when retirement meant a quiet life of leisure, perhaps punctuated by the occasional game of golf or a week-long vacation. Today's seniors are redefining what it means to be retired. You're starting businesses, engaging in lifelong learning, volunteering, and even embarking on second careers. This vibrant, active lifestyle is fantastic. It keeps you mentally sharp, socially engaged, and genuinely happy. However, it also comes with increased financial demands. Taking a university course, funding a startup, or traveling extensively requires a more substantial income than the traditional retirement model anticipated. By boosting CPP benefits by up to $1,300 per month, the government isn't just helping you keep up with inflation. It's investing in your potential. It's a recognition that seniors are not a demographic to be merely supported but a powerful resource to be unleashed. With this extra income, you have more freedom to pursue these enriching activities, contributing to your personal growth and, by extension, to the vitality of your communities. When seniors have the financial means to remain active and engaged, everyone benefits. from local economies boosted by your spending to younger generations who gain from your mentorship and wisdom. Now let's address a concern that some of you may have. Is this increase in CPP benefits sustainable? Or is it a short-term fix that will leave future generations in a lurch? It's a valid question, especially for those of you who have children and grandchildren. You don't want to see your own financial situation improve at the expense of younger Canadians. The good news is that this CPP enhancement has been structured with long-term sustainability in mind. The increase isn't being funded by taking on massive government debt or by slashing other essential programs. Instead, it's the result of strategic changes to CPP contributions and investments. In this way, the enhanced CPP is an intergenerational contract, a promise between older and younger Canadians. Today's seniors receive the increased benefits they need to navigate the current economic challenges, while tomorrow's retirees are assured of an even more secure financial future. It's a model of social policy that doesn't pit generations against each other, but rather creates a cycle of mutual support and prosperity. This long-term perspective is one of the reasons I'm so enthusiastic about the CPP enhancement. It's not a band-aid solution, but a fundamental strengthening of one of Canada's most critical social programs. Let's shift gears now and talk about who exactly qualifies for this $1,300 monthly increase in CPP benefits. As I mentioned earlier, this figure represents the maximum potential increase, and eligibility depends on several factors. The primary determinant is your lifetime CPP contributions. To qualify for the full $1,300 boost, you generally need to have contributed the maximum amount to CPP for at least 39 years between the ages of 18 and 65. This means that for much of your working life, you would have been earning at or above the year's maximum pensionable earnings, YNPE, which is the income threshold set by the government each year for CPP contributions. In 2024, the YNPE is projected to be around $68,500. If your annual income has consistently been at or above this level throughout your career, you're in a good position to receive the full $1,300 increase. This typically applies to individuals who have had long, successful careers in fields like law, medicine, engineering, or senior management roles in large corporations. It also includes successful entrepreneurs whose businesses have provided them with substantial, steady income over several decades. If this describes your career path, congratulations. You're likely looking at a very significant boost to your CPP benefits. However, I know that many of you watching don't fall into this high-income category, and that's okay. The beauty of the CPP is that it's designed to provide value to all Canadian workers, not just top earners. If your income has generally been below the YNPE, or if you've had periods of lower contributions due to factors like job loss, illness, or taking time off to raise a family, you'll still see an increase in your CPP benefits. It just won't be the full $1,300 per month. Your increase will be proportional to your lifetime contributions. For example, if your average lifetime earnings were about 60% of the YNPE, you might look at a CPP increase closer to $800 per month, still a substantial sum that can significantly enhance your retirement lifestyle. Another factor that affects your CPP benefit amount is the age at which you start claiming it. In Canada, you can begin receiving CPP as early as age 60 or as late as age 70. If you start at 60, your monthly benefits are reduced by 0.6% for each month before your 65th birthday. So if you're currently 60 and thinking about tapping into CPP early, you need to weigh the appeal of immediate income against the reality of permanently reduced benefits. On the flip side, if you wait until 70, your CPP payments are increased by 0.7% for each month after your 65th birthday. This means that by delaying CPP for those 5 years, you could boost your payments by a whopping 42%. And this increase is on top of the enhanced CPP benefits we're discussing. For those of you in your early 60s who are in good health and have other income sources like RSPs or work pensions, waiting to claim CPP can be a very smart financial move. Not only will you receive the enhanced benefits that could reach $1,300 per month, but you'll also get that substantial delay bonus. In this scenario, some seniors could be looking at total CPP benefits exceeding $2,000 per month. That level of guaranteed, inflation-protected income can provide incredible peace of mind, freeing you to use your other retirement assets more flexibly, whether for large purchases, gifts to family, or as a safety net for unexpected expenses. Now you might be wondering, Michael, this all sounds great, but I've already been receiving CPP benefits for a few years. Am I out of luck with this increase? Not at all. One of the most commendable aspects of this CPP enhancement is its inclusivity. Even if you've been collecting CPP for some time, you'll still see your benefits go up. The exact amount will depend on your contribution history and when you started claiming CPP, but the increase will be retroactively applied. You don't need to fill out any special forms or make any calls. The adjustment will happen automatically, reflecting both the new, higher benefit rates and any back payments you're owed. This retroactive feature is crucial because it acknowledges that many current retirees have been struggling with inflation for several years now. By making the CPP increase retroactive, the government is effectively saying, "We understand that your costs have been rising, and we're not just going to help you from this point forward. We're going to make up for some of the ground you've lost." This approach helps to level the playing field between new retirees who are just starting to collect the enhanced benefits and those who have been relying on CPP during these economically turbulent times. There's another group that stands to benefit significantly from the CPP enhancement: widows and widowers. Losing a spouse is an emotionally devastating experience, and it often comes with serious financial repercussions, especially if the deceased partner was the primary breadwinner. In recognition of this, the CPP is always offered survivor benefits to help bridge the financial gap. With the new enhancements, these survivor benefits are also increasing substantially. A surviving spouse who is over 65 and also receiving their own CPP could see a combined benefit that approaches or even exceeds $2,000 per month. This boost to survivor benefits is more than just a financial adjustment. It's a compassionate policy that recognizes the unique vulnerabilities faced by elderly widows and widowers. When you lose a life partner, you're not just mourning the emotional loss. You're often dealing with a host of new financial pressures. There may be outstanding medical bills, funeral costs, and the sudden shift from a dual income to a single income household. During a time when you need stability and comfort, the last thing you should be worrying about is whether you can afford to stay in your family home or maintain your standard of living. The enhanced CPP survivor benefits provide a more robust safety net, allowing you to focus on your emotional well-being without being haunted by financial fears. Here at Seniors Money, we're committed to ensuring you have all the tools and knowledge to make the most of this opportunity. In the coming weeks, we'll be rolling out a series of follow-up videos that dive deeper into specific aspects of the CPP increase, from tax implications to estate planning impacts. We'll also be launching a special section on our website with calculators, checklists, and expert Q&As, all designed to help you personalize this information to your unique situation. Your retirement security is our mission, and with developments like this enhanced CPP, we're more energized than ever to empower you for a truly golden future. Thank you for your attention throughout this comprehensive look at Canada's game-changing increase in CPP benefits. Remember, this isn't just about an extra $1,300 per month. It's about recognizing your worth, securing your well-being, and expanding your horizons in a retirement that you've so diligently earned. From all of us at Seniors Money, here's to your prosperity, your peace of mind, and the endless possibilities that lie ahead. Stay informed, stay engaged, and most of all, stay inspired.